Hi, everybody. This is Hyperwave. I am here with Tyler, and this is going to be very interesting. So, yes, last night we entered into a bet, and it's been covered. That made my day. The fact that it is actually in the Turkish media, and we are going to explain why it was a pretty easy bet to make. And then we're going to absolutely look at the very wild markets right now. But there is a reason I am wearing my shirt, besides the fact that I don't adult anymore. Yes, I do. Don't worry, clients. The trend is your friend. But yeah, this will be fun. Ty, I'll start off with you. Why was it pretty easy to make? I pretty much texted you last night, was like, hey, this guy wants to make a 1 Bitcoin bet. You want to have some fun? What do you think about this one?
Yeah, it didn't take me very long to answer Leah and say absolutely, but let's just change a couple of the terms and see if he'll go for it. He did, and we're very confident. This is going to be a lot of fun. I don't expect either uh, party to win the bet for a number of months, maybe as long as a year, but we shall see, and that will give everybody a lot of fun discussion material in the meantime, as we've seen on Twitter. Lee and I both picked up 200 or 300 new Twitter followers. Just wondering who these weird people are, and so I thought we'd have a little fun today and just go through the thinking, because to me it's not much of a bet really. There's a lot of pieces to it. It's not as simple as are we going up from here or down from here. And as Leah's shirt says, the trend is your friend. Um, and I will always go with the main trend in any analysis that I do, and then go down to the shorter time periods, intermediate and short term. I think this is a long term bet. For us to lose the bet, the trend that has been in place for 14 months must change. It must go from down to up. And as of last night, it's very clear to me where the trend of Bitcoin and the other cryptos are. It's in a long term downtrend that's nowhere close to coming to a bottom. Now, that's point number one. Point number two is nobody knows where the bottom is. And about a half a dozen great analysts using different techniques have come up with a number somewhere around 2,200 to 2,800. And I think that's very reasonable using the techniques that they use. We use a technique that is proprietary to us, that we've been teaching a lot of people recently, called Hyperwave. And I think that is the joker in the deck. And this joker happens to be a wild card that basically gives us a tremendous advantage over someone trying to pick a bottom of a long-term trend. So we're going to go over those things very briefly. But when Leah told me what was going on, a metaphor came to mind, which is usually what happens with me when I make a decision. And I immediately thought of a song by Arlo Guthrie that's called "The City of New Orleans." And I know that train very well. I have taken the trip from Chicago to New Orleans on two occasions on the train called the City of New Orleans. And there's a stop a little over halfway between Chicago and New Orleans, and that's Memphis, Tennessee. So what I pictured in my mind was I just left Chicago the night before. I've been on the train all night, pull into Memphis, Tennessee, and some guy gets on the train and he's disoriented. He's not real sure what's going on. He knows that the train runs from Chicago to New Orleans and back to Chicago. And he says, I will bet you that we will get to Chicago before we get to New Orleans. Now, just picture the geography here. All three of them are lined up from north to south. On the north is Chicago. Let's call that $6,500. Memphis is right in between. Let's call it $3,700, which is where Bitcoin was when we made the bet. At the bottom is New Orleans, which is $1,500. And this guy says, I will bet you 1 Bitcoin that we will get to Chicago before we get to New Orleans. And I say, in a very polite way, not that, sir, you are drunk, but I say, I'll take that bet. I will bet you we get to New Orleans before we get to Chicago, knowing full well that the train is going from north to south. The same as a long-term trend in Bitcoin going from 20,000 down to 1,000. I believe that 1,000 is the terminal point in New Orleans only because I've taken this train 400 times, and every single time I've left Chicago and got to Memphis, the next stop was going to be New Orleans. Now, something could happen. Something weird could happen. The tracks could be screwed up between Memphis and New Orleans, and they have to turn around. So I'm not going to say there's 100% probability of hitting that target of New Orleans, but it's pretty darn close. You've all heard me say that I think that the hyperwave in Bitcoin has over a 99% probability of getting to 1,000. And that's only because I've done this 400 times, and each time that's what's occurred. So that's our joker card here, and why I took the bet so readily. Because I know that the train is not stopping in Memphis to turn around to Chicago. It's going to keep on going south till it hits New Orleans. Now, I'm going to pull up a quick chart, and we are going to take a look at the same things we always look at, which has nothing to do with hyperwave. It has to do with trying to figure out what is the trend of Bitcoin at this moment in time, meaning as of yesterday, with Bitcoin sitting at 3,700. So what I'm going to do is I'm just going to quickly go here and go here and pull this up. And then I'm going to go here and I'm going to share a screen with you. And most of our viewers have seen this screen and this analysis many, many times, but I think it's particularly applicable now. Okay, here is where we are with Bitcoin. I'm going to go to the weekly. This is Bitstamp, which happens to be the trade that we just made last night. And the question is, for those of you that don't know about Hyperwave and just think it's kind of a silly rendition of the Wall Street cheat sheet or just a bubble, those 150 people that have taken our webinars and workshops know better. We've gone through 50 or 75 examples over a 100-year period that look just like this chart. This chart is not finished, though, because it has not come to its terminal point, which is 1,000. Well, the original bet said that I would bet that we would get to 1,000. And I wanted to change that a little bit. And I said, make it 1,500 and make it 6,500 on the top, and I'll take the bet. So let's just take a look at this now. We're not going to talk hyperwave because many of you don't know all of the rules and have seen all the examples that people in our workshops have seen. But this is an incomplete hyperwave. It will be complete when it comes down to about the $1,000 level, which I believe will occur maybe later this year, maybe not for another year or so. That doesn't matter. What does matter is traditional tools that measure this thing called a trend. And the first one we always look at is the stop and reverse point. And here, our friend who's made the bet has got something going for him, 3 dots below the price action. If the price action drops down to 33.06, that will no longer be supportive of price. We will begin another downtrend. But you can see that the downtrend, according to the stop and reverse points, has been intact except for these 4 little dots here and the 3 that we are now working on. So I will call that neutral, which is a very kind interpretation of this chart. It's not bullish, it's not bearish, but it is caught in between. And we've got other examples in the past of when that stop and reverse point has broken and then reestablished itself back to the downside. Let's take a look at the Bollinger Bands. The Bollinger Bands are clearly negative, and we're talking long-term trends on a weekly basis. What I mean by that is we're below the midpoint of the Bollinger Bands, and as we come up to it by going sideways, the probability increases that we're about to go back down and test the lower band, which comes in right around the 2,000 to 2,100 level, at which time the lower Bollinger Band will begin dropping along with the upper band, and the middle band will continue down and accelerate. I look at that as very negative. So let's take that off and take a look at Consensio, having nothing to do with Hyperwave. It's simply another technique that is proprietary, but is used by many people without understanding all the implications of what Consensio teaches you. But in this case, we are fully bearish, meaning if we take a close-up look, that the long term is moving down sharply, and this is important. The long-term trend, which in this case is a 30-week moving average, or on Bitcoin, approximately 200-day moving average. And it is accelerating down, and because it's below 5,000 now, I think the maximum move up against it is that 4,900 to 5,000 region. 6,500 is way up here in Never Never Land. The only way we get up there is if we've actually got a bottom. And that's what we're exploring right now. What's the probability that we actually have a turning point in this long-term trend? So the next thing we want to do is we want to take the prices off and just take a look at the Consensio moving averages. What you have here is the intermediate term and the short term crossing above and below and basically going sideways all the way back to the end of December. Not supportive, not headed up, and the short term is just cut through the intermediate term, which is just moving up slowly. That does set up the possibility of a movement in price back up above the 4,000 to 4,200 area, which I have explained in a lot of other vlogs is very formidable overhead resistance to this downtrend that we're in. I'm going to put the candlesticks back on. I'm going to remove the moving averages, and we're going to take a look at what some people have been saying in Twitter is a very bullish move on the RSI. I look at that just the opposite, as you all know, because of what came at the other extreme of the trend, which was the uptrend that spent all of this time in deeply, deeply overbought territory. We have one point that occurred back here on December the 9th, approximately, where the relative strength index barely broke the lower band of the RSI at 30. It got down to 29.4. And since then, without price really moving up at all, it has gone from 30 all the way up to the recent right below the 40 level. Let's call it 39.9 to 40. All that is doing, by my reading of RSI long-term trends that I studied directly under Wells Wilder Jr. back in the 1970s, is that this is simply resetting before headed back down into deeply oversold position. The only way that is not true is if somebody can interpret this bottom as capitulation. Well, if this is a capitulation bottom at 31.22, then what the heck was all of this? And for the last 3.5 months, all of this, if this was actually capitulation? My answer is it is not capitulation. It is not a V bottom. It's a rounding bottom that has reset for another test of the lower RSI numbers. Let's take a look at one other thing, the MACD. And the MACD is slightly bullish, but well below the zero line, even though the histograms have been slowly building as they have done for 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks before the next big break. This was the 6,000, 5,800 to 6,200 region. Another reason I love that 6,500 target that our opponent has chosen, because that would mean breaking back through 5,800, 6,000, 6,200, and 6,300 before he can win his bet. All right, so I'm going to go back off screen share now, because what I've just shown you is my interpretation of what we all know is a major bear trend, a major downtrend.
There we go.
And therefore, the bet that we placed is not an even bet at $3,700, because the majority of the force is on the side of the sellers, not the buyers, until that long-term trend is in jeopardy. True, the short-term trend is clearly trying to pop back up to that 3,800 to 4,000, and then 4,000 to 4,200, but the intermediate and long-term trends are down. We have just left Memphis. We are headed south, and we're picking up speed. And the trend will not end until we get to the terminal point, which is New Orleans. So for those reasons, and because he was kind enough to allow us to win the bet with just a $2,200 drop from yesterday's price, and he had to have a $2,800 increase against the trend above the long-term moving average, above the 6,000 to 6,200 level, in order to win his bet. That's a bet I would take any and every time. Then there's a bunch of discussions about, yes, but if he wins, he gets $6,500. And if you win, you only get $1,500. And Leah made it very clear in her tweets today that's absolutely ridiculous. It's true that the value of Bitcoin at those two extremes will be either $1,500 or $6,500. That has nothing to do with our ability to hedge completely that bet. With Bitcoin we already have, that people have paid us for various services that we've rendered. We can use those at much lower prices, or we can simply lock in the price of Bitcoin as of yesterday at the $3,700 for one of our Bitcoins. And he can do the same thing, and I'm sure he will be doing the same thing, depending on what the prices do in between. So there's many other factors other than simply the way the bet was set up. So this is going to be fun for everybody to follow. The trend is your friend, and as long as the trend is in our direction, and we have got this uh, amazing formation that so few people know about, called Hyperwave, that has a couple of characteristics that none of those other bubble charts or Wall Street cheat sheets or back Jesse Livermore's interpretation of what a bubble looked like. None of that is included in the Hyperwave analysis, which is far more precise and has so many examples that we can come to conclusions about the probabilities in each of the phases, starting in phase 3, 4, 5, 6, and finally in phase 7, which we have been in ever since phase 2 broke at the $6,000 level. So I just wanted to go over that very quickly. If anybody thinks we're at all nervous about the bet, I just wanted to make sure everybody understood that we are completely ignorant, or we know something that a lot of other people don't know. And only time will tell which of the two of those things are true. So that was fun. What I want to do now is talk about some of these wild markets, and then we're going to end up with a brief overview by Leah of a webinar that's coming up in about 2.5 weeks, that is part 2 of our Hyperwave workshop. These last 8 to 11 hours, we're going to try to keep this next one down to about 8 hours over 2 days. And we'll go into some details about that. It's simply trading all the phases. At what point do you buy? At what point do you sell? What are the probabilities of your trades? What kind of stop losses you use above and below your trades as you go from one phase to the next. And we'll use about 30 different examples, many of which we did not use in our earlier Hyperwave webinars. So with that, what I'm going to do is I'm going back to screen share. And this time we are going to take a look at some of the markets that I'm calling wild. And I will explain why, even though they're not really going anywhere. So what we're going to do is I am going to pull up some indexes. And we'll start with the Dow Jones Industrials.
Well, and Ty, if I could say one thing.
Of course.
Wild also in that people psychologically are totally freaked out, right? Like the news is just, Trump is tweeting Tesla, everybody's talking about Musk. We've been talking about oil, but that's because, everybody kind of knows my views on oil, but everything is just up, down, topsy-turvy. If you look at Shanghai, all the Chinese econ data came out, our econ data came out, but that's exactly it, is that no one really knows what's going on, and this flip-flop between some of the most brilliant minds and brilliant minds for 40 years in this space on Wall Street are changing their opinions on long exposure and short, and what's going on if there's a recession coming, when even the Fed, there's literally, it's changing daily. So yes, let's pull up those indexes. And also, why Wild, in my opinion, is because no, everyone's freaking out every other day about something else.
Absolutely. The fundamentals are confusing, but the technicals are equally confusing. This is the Dow Jones Industrial Average going back to the end of 2017. And as everybody knows, there has been a roaring debate about this bull market. It started all the way back in March of 2009 and has been going up ever since. Now, the difference between long-term trends and intermediate-term trends and short-term trends are very evident on this chart. The long-term trend was up for 10 years, but it was broken up by periods of sideways consolidation, which are intermediate-term trends. Every time that happened, what we ended up with is breaking to new highs. So let's take a look at this action. This action for the past 14 months is bigger, steeper, more chaotic than any of these other intermediate term periods. And as we sit here today, a number of things have just occurred in the last 2 weeks and over the intermediate term. This intermediate term bottom was so oversold that it got us to get out of inverse positions for clients in the second and third week of December, thinking we would have 1 or 2, maybe 3 or 4 weeks of upside action. But it just kept going straight up. And if you listen to Tone's analysis recently, he went back and showed that this movement over this short of a period of time has not occurred for 10 years, just as this movement, intermediate term, has not occurred for 10 years to the downside with a V bottom. That's the definition of a wild market. So the question is, what happens from here? The answer is, I don't have a clue, because a number of things are happening. One is that Consensio has the long-term moving average moving up, the intermediate term moving average having just broken through 2 weeks ago, and the short-term moving average above the intermediate, above the long-term, and price above all three until yesterday and today. Now we have hit which is as close to a 9 as you can get, and it is a 9 if you take a look at other time periods, and we're talking sequential here, and we have started down. So we've got a 1 to 4 week pullback in front of us. Nobody knows if it's going to be 1, 2, 3, or 4 weeks, or if we get down into this region, if we don't go all the way down to another 9. Therefore, from a long and intermediate term trend view, on the long term, you've got to be suspect about all of this action, which could be occurring at the top of a 10-year bull market. On the other hand, this intermediate term move was so strong that it is now in a position to challenge the all-time highs on the Dow by only moving about 4% higher. And Consensio was saying you should be fully in. I am not fully in. We have anywhere from 30% to 50 or 55% in the market, depending on clients and what they're looking for. And the rest has all been in cash, even though Consensio says you should be 100% in. And the reason is because I want to see that we can actually get above 2,800 on the S&P and hold it. So let's take a quick look at the S&P, which has been both Tone and Leah and my zone, starting at 2,600 up to 2,800. I said if we could get significantly above 2,800 on a weekly closing basis, I would probably be going all in into the market. But what intervened? A 9 count on a weekly sequential. And now we're getting a pullback, and we have gone from above 2,800 to below 2,800. And as of this moment, we're at 2,789. We have not, in my opinion, broken through the top of that very important trade range between 26 and 2,800. What do you do when you are not sure? You sit in cash and you wait for evidence. We don't have that evidence. The charts that we have been looking at, here is the NASDAQ 100, looks the same. And you are sitting on a 9 on a weekly basis. The NASDAQ composite is sitting on a 9 on a weekly basis. And you see that what we're doing is we're coming strongly up, but still have not made the top. The Dow Jones transports, sitting on a 9 and have not come back up to the top. Also see that the long-term moving average on this transport is still moving down. So we haven't even been able to break above, for Consensio reasons, where we need to become confident of what the long-term trend is. This is the Russell 2000 small cap, just broke above the long-term moving average, which is moving down, but we're sitting on a 9. That's what I mean by wild markets. Now, you can flip a coin and you might choose the right next direction. Or you can use all these technical indicators to help you gather evidence about when and where the next intermediate term move will take place. If and when we can break above those regions I've talked about and challenge the highs, the long-term trend is back intact, but that has not occurred yet. Therefore, we are recommending to everyone to consider your positions. If you're 100% long or 100% out of the market, either of those extremes could work out, but we don't have the evidence, as opposed to what I just showed you for Bitcoin, where the evidence is overwhelming that we're still in a long-term downtrend. I want to take a quick look at another area that's been confusing to a lot of people, meaning me, as well as others, and that is the gold, silver, and gold mining and silver mining shares. This is a chart of gold that looks similar to what we've just seen, with a bottoming out 2 months earlier than the stock market did, and then a rather remarkable move up that took us what I was hoping would be to, I am going to quickly plug my computer back in. Because it's yelling at me. It yells in a very high-pitched voice that I don't like. And what I was waiting for is taking out these tops at approximately 1,380. A bunch of wicks up at 1,380. Most of the bodies of all these candles are in the 1350 area. We challenged that a week and a half ago by running up as high as 1346. But now what happened? We hit a 9. We actually made it a little bit higher, but on the first chance I got, we got out of all of our gold positions last Friday. And that trend continues. Now, maybe it's only a 1 to 4 week pullback before headed higher, but we don't know that yet. The same thing is true on silver, on the GDX, which are the miners, ran into overhead resistance and was turned down. Too early to make a call. Best place to be is in cash. At some point, if this begins to roll over and takes out these moving averages to the downside, it's already taken out the stop and reverse point, as you can see right here, which is the first time in this long run up that we've had that kind of movement. Too early to make a call, but I am glad that we are sitting on the outside looking in. Just as I've been very happy for the last 14 months sitting on the outside of Bitcoin, sitting in cash, waiting for the trend to change. And with that, as a quick overview of why we made this insane bet and why this is a time for caution across all markets, remembering that what Leah and I have been preaching since we started vlogging a year ago is the trend is your friend. You never play counter trend moves as an investor. As a speculator, as a position trader, you can do that all you want, but not as an investor. When the main trend is up, you don't want to go against it. When the main trend is down, you don't want to go against it. You want to wait for evidence of a trend change. And one of the best ways I know of doing that is this system that we call Consensio, that gives you 13 basic steps between a bull and a bear market. And for more information on that, you can go to our website. We have a webinar that can be purchased on Consensio that goes for about 4 hours into details of how you make that analytical choice. We are also recommending to people that are trying to learn this much more complicated thing called Hyperwave to really understand Consensio before we get into the details of trading Consensio with Hyperwave Theory. So now I'm going to turn it back to my wonderful partner and have her show you exactly what we've got cooking on March the 23rd and 24th.
All right, Ty. Well, actually, I already have the screen share up.
Great.
So if you want to talk about it, so everybody just, again, it's Lucid Investment Strategies.
I'll be glad to do that. For newcomers, the price is the same as our other webinars, the workshop in Vegas, the one we just had, which is 0.3 Bitcoin or $1,000 for an 8 to 10 hour in-depth workshop. But for anybody that has gone to any previous workshop or webinar, we are giving a 75% discount on that price because you've already set through all of the basic information. This is Hyperwave webinar part 2, which is going to be on the first day from 10 to 12 o'clock, where we are going to go over the rules of Consensio and the rules of Hyperwave, wave phase by phase, but that will be it in terms of the introductory part. The next 6 hours are going to be actually trading with Consensio, with Copic curves, with stop and reverse points, with the ADX, and with Socrates's recent highs as a critical overlay to Consensio in finding where and how to move in phase 2, in phase 3, and in phase 4. On the in the afternoon, we will do questions and answers on that 4 hours that we've just covered. And then we will begin day 2 at 10 o'clock on Sunday morning, where we will go into phase 3 and phase 4. Just a quick typo where it says, why does phase 3 begin the hyperwave? How does the evidence from Consensio confirm? It should say that the phase 3 and phase 4 excitement is beginning. On the upside, in Bitcoin, it began back in August and ran only for 4 months. But over that period of time, as everybody knows, that was an explosive move from down around the 3,000 level all the way up to 20,000. That is the excitement of a phase 3 and a phase 4. Then after we take a look at how you play that as price gets way above the phase lines, how do you protect your profits, not knowing if you are entering into phase 5 yet? And then finally, in the afternoon, we're going to take a look at how you make determinations of phase 5, 6, and 7 with a bunch of examples again about how each one is played out historically from a trading point of view, when you can get into a 5, when a 6 is beginning by using Consensio, when you can get into a phase 6 before the 7 starts, and how you can tell a move from the 6 to the 7 using 3 or 4 different technical indicators on top of just basic hyperwave theory. So we're going to cover all of that in a 2-day period. It will go very in depth, a lot of new charts, and we hope that everybody that has seen part 1 will take advantage of this deep discount, and we hope to see all of you in 3 weeks.
Awesome. All right, we will stop there. Everybody have a great day. And I think we're trying to get all these out like every single day. So we're gonna keep going at it. Okay, everybody, take care.
Great. Bye-bye, everyone.